Hey there, GoPro traders, and welcome to another Monday market review held by GoPro Trading Academy and obviously being presented by yours truly, Ian Giffen. Well, just to start off, I'd say that the current theme of the market, as we normally discuss, is one really of waiting. I'd say there's definitely evidence that market participants are waiting to see what is going to happen. Now, I don't normally talk about fundamentals that are out there, and I'll resist that again today. But if you are paying any attention to the macro issues going on around the world, I think it makes sense that the market is looking to see if they should be risk on or risk off. So that being the general theme, I'd say there also are a couple of exceptions. Certainly the New Zealand dollar weakness is notable. And when we look outside of the currencies as well, there's some interesting observations I'd like to make today. We'll get to those markets after we've run through the currencies. So hang about for that. We're going to have a look at what's happening on gold, US treasuries, and a few other interesting instruments as well. And of course, if you haven't yet subscribed to our channel, please do so and hit that notifications bell so that you are advised when we bring out new material. Obviously, we are here to help you as your partners in trading to become successful, consistently successful in your trading, and to be able to enjoy all the benefits of that we do. All right, so the other thing I just point out is that what's been happening in the market over the last week is probably also quite a good exercise for those of you who are busy going through our advanced price action training in the academy. So definitely some really good examples of why our methodology works and why it's worth taking note of. Well, certainly we'll look at particularly, I'd say today, a few interesting areas where support resistance that we identified previously is really showing itself to be holding. It's always good to be able to do that. A lot of strategies that we have are built around this fundamental price action element of support resistance. So we'll have a look at that today as well, in the absence of many trades to look at. All right, so starting as usual with the Euro US dollar here on the weekly time frame. I could probably look to try and advance this analysis already, but of course it's very early in the week here. But should this carry on going down, it'll be ringing that high. And of course, it will be the end of this bullish wave. So not much here on the weekly time frame, of course. Last week, just giving us that bearish candle, still inside of the channel. But remember that this preceding resistance level was respected over the last 2 weeks, as you can see with the wicks of these two candles. And we'll see that on the daily as well in a minute. That's interesting insofar as when we had this preceding breakout, it means that this trend is technically still intact. Very weak on this time frame, that is true. But we do still have an intact bearish trend on the weekly time frame, which again speaks to potential strength on the US dollar. For those of you who pay attention to Elliott wave analysis, you'll see that there's quite a few interesting patterns showing themselves across many of our main instruments. All right, so looking at the daily time frame, that's what it looks like there. You see this resistance level again, how well it has been respected. Of course, this is the roof, if you like, of our HDC channel as well as the LPO channel, as we've identified beforehand. So with the advance in our analysis, of course, the HDC channel has caught up with the expansion of the LPO. So we are still very much inside of this channel. But nevertheless, the fact that this resistance level is held, which both, as we noted on the weekly time frame, there's signs of dollar strength technically here on the daily time frame as well. So interesting to note that. Now, we're not trading this yet. Of course, there is the potential during the course of this week that we could have a class 1M pattern, but at the moment, nothing doing. For those of you who trade the version of our gamma overlay on the range, you should have entered the market already, in fact, this morning, and be short this market. So for those of you who are doing that, but otherwise, there's no trade there on the euro for us. All right, so moving on to the cable, here again on the weekly time frame, nothing to look at all. And last week's reverse or inverted hammer candle, looking like this on daily, really just going absolutely sideways throughout the course of last week. We did have that high ringed as well, which means that resistance again is being respected here, showing potential dollar strength. But as I said, that's still potential, and we are waiting for the market to prove itself. Dollar yen, the US dollar here testing this resistance level last week, again not breaking through. We've had 1, 2, 3, 4, 5, and including this week 6 tests of this resistance level. We also over time have seen higher lows here. So again, long-term, the long-term outlook here is still dollar strength. Not tradable, but nevertheless interesting. And on the daily time frame, deep inside of the channel, no valid patterns at all. So not looking to do anything there. So we are biding our time. Having said that, we do have this bullish cyclicity again, which backs up what we said there on the weekly time frame. So again, you know, as I mentioned at the beginning, this is interesting from the point of view of catching up with our technical analysis and getting the hang of that. So dollar Swiss really just going sideways here. Last week's inverted hammer again, an inside bar, not of interest to us at all. And of course, here on the daily time frame, just a mess. So really, that's just not something that I'm really paying attention to at the moment. Usd Cad, the Looney, again, you know, this could end up being a ring low, but it's very early in the week. Inside the channel, no valid patterns, so nothing really for us to go on there. And likewise, as you can see throughout the course of last week here on the daily time frame, absolutely nothing. The one thing that is useful, and we discussed this in our mentoring program not that long ago, I like looking at as a dynamic level of support resistance is this 55 EMA. So as you can see, what's encouraging about this is how well it has worked throughout the last couple of weeks as a level of support here. That again, supporting, so to speak, my theory around potential dollar strength showing itself here. On the Aussie, we're going to get to the Kiwi in a minute, which is a bit more interesting, but it's actually respected that support level last week, though, showing us that's inverted hammer now. We're not interested in trading this because obviously, you know, if we're looking at the weekly as a selection time frame, we are still inside of the channel, but don't forget that we do actually have a potential class 1 M pattern showing itself here. So for those of you who don't mind the fact that we're inside of the channel and are a bit more aggressive, you may well be keeping your eye on this. And of course, if you're trading the hybrid strategies, that's certainly something you'd be looking at. But here on the daily time frame, you'll see that the bullish cyclicity of that retracement wave is still intact. So you'd be looking for a breakdown in the sequentiality of cyclicity here. But rather than look at that, the Kiwi is a lot more interesting, of course, because we do have an established bearish trend here where we are still outside of the channel. We've got that, likewise, that potential end of a phase 2 or retracement wave, with last week's inverted hammer respecting that resistance level very nicely. And if you look at the daily time frame, however, you'll see that similar to what we've just seen on the Aussie, that bullish cyclicity is still intact, but it's looking like it may well be coming to an end very soon. The other thing that's worth pointing out here, that unlike on the Aussie, is that this bullish wave is in fact a phase 2. It did not close above the previous wave's high. So it is still, that means it is in fact a class 3 pattern. So for those of you who are more aggressive and are going for class 3 patterns, then you would have actually shorted this already this morning on a hybrid. But that is obviously, that is obviously with the, within the scope of the rules of a hybrid strategy, if you're prepared to go for that. So remember, it is a class 3 pattern because we did not get a close above that previous wave high. So a nice looking setup there. And of course, once we get, if this does turn into a rollover and a continuation of bearish direction, that will really start opening things up again for our lower time frame trades. Right, so that's the end of the majors and the minors with the dollar. Moving to our yen crosses. Euro yen here on the weekly time frame, still very much inside of the channel. but it looks like we're seeing the end of that bullish wave. And on the daily time frame, worth noting that this was one of the few trades that we got last week. Last week as well, just something to point out. Worth noting, it was a really good week to learn not only some technical analysis, but also how to do nothing. For those of you who've been in my training, you will know that I say this very often, that one of the hardest things that I've found in teaching traders over more than a decade is teaching them how to sit and do nothing when that is called for. And that was certainly the case generally last week, but we did in fact get a setup to go long on dollar yen. Managed, it was H4 type, right? H4 impulse, managed to get our take profit in that spike just before it rolled over. So nice to have at least got something out of that, but then this has now gone from a bullish phase one straight into a bearish phase one or impulse wave. So complete breakdown in that bullish cyclicity, back inside of the channel, nothing to do any further. So if you are looking for an overlay, you may well do that, of course, but we'd need to see some change in cyclicity as well. Looking at the H4 time frame, for those of you who look to trade the overlay, what we ultimately had was this very strong bearish candle, which kind of precluded us from being able to jump into an overlay over there. So nevertheless, it was a nice winner on our core strategy. On the Gbp Jpy, again, you'll see that we are inside the channel and seeing this resistance level being respected. So considering that we wouldn't be too surprised if the market goes into a risk off phase with everything that's going on in the market. It's interesting to note that the yen has continued to show some weakness against currencies such as the pound, but it's not really going anywhere. So much as we had a bit of bullish cyclicity over here, and we've been able to advance our analysis a little bit, that bullish breakout looks like it was very temporary and it's pulled back inside of the channel. And of course, there's no scope for a class 1W pattern there either. Swiss yen, likewise, on the weekly time frame, yes, it is technically still in a bullish trend here. So interesting to note that, but also interesting to note that last week's candle very much respected that resistance level. So after having pulled back inside of the channel, not a valid class one, that's a class 2W pattern, of course. And there's certainly scope for this to roll over and isolate that high during the course of this week. We obviously need to wait for the market to prove itself, but there is potential for that. And looking at this here on the daily time frame, inside of the channel, very much respecting the resistance and of course the support at the moment as well. We need to wait and see what the market tells us before we can do anything there. CAD yen, similar picture. I could, as I mentioned on some of the other pairs, potentially advance our analysis over here, but it's a bit too early in the week. This could end up being a non-relevant isolated low, so biding my time there. Not interested in any case in that. And likewise here on the daily time frame, you can see deep inside of the channel, there's nothing valid for us to look at as well. So very little, as I mentioned, we need to just sit on our hands when that is called for. And when there's very little on offer, that's precisely what we do. Allows us to keep our powder dry and make sure that our capital remains intact for those favorable trading periods. Right, Aussie yen, similar, as you can see, a bit of yen strength showing itself through the latter part of, well, on Friday in particular, and possibly continuing through the course of the start of this week, today being Monday. But nevertheless, still very much inside of the channel. And if we get a close inside of this preceding retracement wave, it means that any hope of a class 1W pattern has been dashed. So not interested in that at all. Kiwi, additional weakness of the New Zealand dollar, excuse me, also being visible here. Here on the weekly time frame now, this is technically bearish cyclicity, but we are still inside of the channel here. And it's not really showing that much direction. Of course, that high test or inverted hammer looking like this on the daily time frame, with last week, really the Friday's candle bringing it all the way back down and turning that into a high test. And that continuation through the course of the early part of today is certainly visible as well. Let's wait and see what happens. Again, for those folks who are, and just to have a quick look on weekly, for those of you who are looking to trade a hybrid, this would be outside of the rule set, because here on the weekly time frame, our selection time frame, we don't have a valid class or potential class 1M pattern, nor are we outside of the channel. So you need to sit on your hands. So that's a bit of a difference between the Kiwi dollar and the Kiwi yen. Again, something probably best just left alone. Euro GBP on weekly, after that very strong bullish engulfing candle that we had the prior week, last week, just coming back down, giving us a close outside of the channel marginally. But that's still interesting in that here on the weekly time frame, that is still relatively bearish. So for those folks who are really aggressive and don't mind the fact that we don't have a class 1M pattern here, the fact that we closed outside of the channel, you may well be looking for a setup to go short with something like a daily impulse. However, for our execution time frame, for that to be possible, we couldn't take a trade with us being, of course, in what is here a class 4 pattern. So class 4M pattern, definitely not something that you can look at, but it certainly has the potential to roll over and become at least a class 3M pattern over the coming week or two. So one to keep an eye on, but this could go either way. So let's just leave that one alone for the moment as well. Euro Swiss, likewise, as we discussed a week ago, a very distinct end to this bearish movement. And just going back quickly to Euro GBP, same thing here. Obviously, that bearish cyclicity, we discussed this before, very much over. So this is more likely to turn into bullish cyclicity the way things are looking at the moment in any case. But there is definitely a conflict, still looking here at the Euro GBP, between this bearish cyclicity on weekly and the bullish cyclicity on daily. So another reason just to leave it alone. And as I mentioned, so here on Euro Swiss again, a similar kind of picture, but here on weekly, the bearish cyclicity absolutely finished, and that bullish impulse candle and wave looking a lot more bullish. But here on daily, we've seen an absolute breakdown in bullish cyclicity. You'll notice how this resistance level was well respected on Thursday, and that high being isolated and in fact ringed on Friday. So again, nothing to look at, not that we look at this instrument very often at all. And the same can be said for Eurocad. Nothing here on a weekly. The previous week or the prior week's bullish impulse candle turning into a week last week, really just a retracement and an inside bar to boot, looking like that on daily. So for those folks who trade the end of an impulse wave on the selection time frame using the gamma overlay, then this would have potentially been an entry for you this morning, although you may well have a bearish sell limit order in place, which would have triggered through the course of this morning. So that's the only thing that really you could be looking at over there is an overlay. Euro Aussie, similarly, we're looking at very little that's of any interest to us here. So we did note a week ago, that we'd had that strong bullish impulse candle and impulse wave, but no valid pattern here on weekly at all, and still very much inside of the channel. But it had led to that breakout on the daily time frame. Now that retracement candle on weekly last week looking like this, where it really just came all the way back inside of our channel. And in fact, here's an example of where we can advance our analysis with this low being ringed on Friday. So we'll just do that quickly. So we get the updated picture. Well, it makes no difference to our channel at all, of course, our HDC channel. So if you are looking to trade an overlay, you'd be looking for an isolated high and a bearish impulse candle here on the daily, and that could well happen over the next couple of days. But that's something just to wait and see. Otherwise, nothing doing at all. And the last of our Euro crosses here, Euro Kiwi, same kind of picture. We'd had a nice bullish breakout though the prior week here on the weekly time frame, which means that there was a potential for our core daily impulse strategy through the course of last week. Now, this is still a potentially valid class 1W pattern. That is absolutely true, but we are potentially in a retracement over here. Certainly visible here on the daily time frame, a definite retracement. Here is an example where certainly we have a potential class 1W pattern. We are still in this bearish wave over here on daily. So if you were looking for a hybrid, of course, this would be a selection time frame with an intact bullish trend on daily and a class 1, potential class 1W pattern as well, if we get an isolated low. And it's whilst we're in a class, what is a class 4M pattern, that you would be looking for the setup for a hybrid. And of course, that would be taking us down to the execution time frame, which is here on the H4, where you'd be looking for a breakdown in that bearish cyclicity, which of course has already taken place, and followed by the final selection criteria being that bullish impulse candle, which we got. So about, well, what's it, 4, 5, 6 hours ago, you would have already gone long on this, for those of you who are trading the hybrid, looking like a very nice setup and looking pretty bullish at the moment. And of course, that representing a resumption of that Kiwi weakness. So interesting picture. That's not something that we've seen across many of the other instruments at all. One of the strongest pictures that we've gotten, again, that's because it involves the New Zealand dollar. Right, moving on to our GBP crosses. Very little happening here. Gbp Swiss on weekly, not interested in that at all, either on the weekly time frame or daily. That, as you can see, being very weak over the course of last week. In fact, looks like today's candle is more action than we've seen throughout that entire period, which, the way things are going now, should have Friday's high ringed by the end of today. Right, GBP CAD, likewise, weekly time frame, nothing doing. Last week's hammer candle, not of any interest to us at all, very much inside of the channel here. For those of you who are trading exclusively the class 1 patterns, yes, we did get a class 1 W pattern, certainly with the impulse candle on, what was that, Thursday close, ringing that previous low. And for those of you who are trading a hybrid on this, you may well be long on this already. You would have needed to use H4, of course, for execution, but it has been languishing pretty much since Friday. Nothing has changed there. But overall, still looking more bullish than anything else. Bear in mind, of course, though, that we do have this resistance level again coming up, which was respected the prior week. Would be a very aggressive trade, that, no question about it. All right, so GBP Aussie, again, here you can see the Aussie weakness, not as much as the Kiwi, but nevertheless, we are still inside of the channel, but it has been testing, as we noted previously, the resistance level, still very much in a retracement wave, and last week's low test candle or hammer giving us potential insight into the end of that. Now, bearing in mind that this is a potential class 1 pattern. We have not had a close inside that previous wave's price territory. So yes, it's tested throughout the course of, well, the prior 2 weeks, we've had 2 tests of that support level, both of them respected. So if you are interested in the hybrid, you may well be keeping an eye on the cyclicity on the execution time frame, which of course in this case would be daily. Now this is still a class 4W pattern, so nothing doing as yet. You'd be looking at least for a class 3 with that bullish impulse candle. So keep an eye on that through the course of the week if you are a hybrid trader. Right, the last of the GBP crosses again here, the Kiwi weakness, very visible. We spoke about this several times in our last few market reviews, where we have been well outside of the channel on the weekly time frame. And it's also a class 1W pattern, of course, that we are potentially looking at once we get our isolated low. So last week, however, isolated the preceding high, which means that currently we are in a retracement wave or phase 2 on this time frame. And of course, that means that you would have to be a continuation type trader, single time frame analysis to be looking at trading that, which not many people do on the weekly time frame. Or if you're a hybrid again trader, if you're trading the hybrid strategy, you're looking for a breakdown in whatever bearish cyclicity we have. Now, we did have a breakdown on the bullish cyclicity with a failure in this bullish wave on the 4-hour time frame to close above that previous wave's high. and then we had the bearish phase one wave. So this is still bearish cyclicity at the moment. Now we might be in a bullish wave, that is true, but the cyclicity is bearish. So you need to wait for a breakdown in that bearish cyclicity and wait preferably at least for a class 3 W pattern before looking to go long on this one. All right, so, but nevertheless, that Kiwi weakness again showing us the best trades across all of our currency pairs. Right, moving into our other category, CAD Swiss weekly time frame. We've got multiple inside bars here, so well, 2 in a row. Not interested in that at all, and that visible as well on the daily time frame, which really there's nothing there for us to look at. Aussie Swiss likewise. So we'll just swing through this quickly. We did have a test last week of that resistance level. Interesting, but this is an example of how well our methodology works. Now, admittedly, this is quite an established resistance level going all the way back to early December, but it's a very important part of being a price action trader is having a methodology that is reliable in identifying levels of support and resistance, and you can see how well our HTC channel managed that again. But nothing doing for us to trade there. Aussie Cad, yes, technically in a bearish trend here, but the cyclicity is weak. And of course, as we discussed a week ago, we had the close with that bullish candle back inside of the channel, as well as ringing that low. Now we're still in that retracement wave, but it has brought us pretty deep back into the HTC channel here on this time frame, which of course also means that it is at best going to be a class 2M pattern once we get an isolated or ringed high. On the daily time frame, you'll see that bullish move there on weekly is represented by this bullish cyclicity. Now today's bearish move coming back inside of that price territory, we'd need to get this to go and close above that price point there in order for this to be a class 1W pattern, in which case you could potentially look to trade this if you're very aggressive, of course, using the hybrid strategy on with H4 as your execution time frame. This just drop down to that time frame. You'll see that bearish cyclicity, however, is still intact and that the market is still going down. If we get a ringed low above this price point, which is pretty much where we're sitting at right now, about 9060, and if the market fails to close below that point and we get a ringed low, that would represent a class 3W pattern, and those hybrid traders out there, you'd be looking for your final bullish impulse candle to go long on that. So if that's you, keep an eye on it. Aussie Kiwi, also interesting here again, that's New Zealand dollar weakness showing itself. Now the one thing here though is that we've not had, well, if you look at the last 3 weeks, every single one of these candles has failed to materialize as an impulse candle. For those of you who've done the training with me on that, you'll know that that is a sign of, even though this is an impulse wave, it's a distinct sign of weakness. Of course, last week, we also had an inside bar. Now, that doesn't mean that it's no longer an impulse wave. Certainly for the impulse strategy traders, we treat that as a continuation, but there's definitely weakness here. So if you drop down, of course, to the daily time frame, you'll notice that that is very visible with a breakdown in this bullish cyclicity that we had. So for those folks who were trading the daily impulse, you would have taken an entry, where was that? Tuesday morning, you would have gone long on this. You would have managed that. Ultimately, you might still be in this trade, but I think also possibly using the 2-5-step rule, you may well have been stopped out. So if you didn't get into that, then technically, yes, we are still waiting for a bullish setup. But if we do get this low around here ringed and a bullish impulse candle, of course, what that would mean is that we've got a class 3W pattern. So that technically is inside of the rule set for a daily impulse. For those of you who are a little bit more conservative and are counting the failure of the market to give us impulse candles here, showing a very weak phase one, then if that's part of your rule set, you'll be staying away from this market as well. Right, last two, Kiwi Swiss. So again, here the New Zealand dollar showing the fact is showing its weakness and giving us more interesting things to look at. So here on weekly, we are definitely in a bearish, an established bearish trend. In fact, with this resumption of bearish cyclicity, we've discussed that before. But last week's inverted hammer, ringing that preceding low, showing us that we are back into a phase 2 retracement wave. So last week, what we saw was the market coming up to test this resistance level. It tested it and failed to break through it, which is obviously of great interest. It's pretty picture perfect, in fact, for a continuation type trader. And as I say, not many people trade continuations, single time frame continuation strategies on weekly, but you would have actually had an entry this morning. But dropping down to the daily time frame, for those of you who, again, are hybrid traders, you'll see that the bullish cyclicity at the moment here is, in fact, still intact. So we've got a class 4M pattern. We're looking for this to reverse. Now, it's possible that this may well just drop straight through that support level, in which case we would not have a setup for a hybrid, but of course we would then be looking for conditions to be met for the impulse strategy over the coming week or two. Likewise, if you want to use this as a selection time frame, there's nothing going at the moment, but if we do get a bearish breakout in the next couple of days, you'd start looking for your lower time frame impulse strategies, H4 impulse in particular, unless you're waiting for a class 1 pattern, M pattern, and that would just take a little bit longer. Similar picture on Kiwi Cad again, because of that New Zealand dollar weakness, we've got this established bearish trend on the weekly time frame, but also got that phase 2 that transpired over the last couple of weeks. Certainly last week, continuing the move that we got with that bullish inside bar the prior week. Looking at daily, this is what the cyclicity looks like. And once again, perfect for hybrid traders, but we are waiting for a breakdown in this bullish cyclicity, which we haven't got yet, this still being a valid class 4M pattern. It's not a strong one, it's a weak one. Certainly with Friday's close back inside that previous wave's price territory, but an interesting setup, so keep an eye on that. All right, so that is it for our currency pairs. Let's have a quick look at, well, first of all, gold. Here on weekly, we had a strong bullish impulse candle, possible run to safety. Not seeing that on the yen though, but nevertheless, gold showing some strength here against the US dollar with that bullish impulse candle, also giving us an impulse wave. And then dropping down to the daily time frame, we've got a breakout of our HDC channel. No, it's not a valid class 1W pattern. That is true. So you might have to wait a little bit if that's what you're looking for. Currently are outside of that. So if you're purely a channel trader, then you'd be looking for a bullish impulse candle here, which you may get when this candle closes. And that is, in fact, pretty soon. So keep an eye open for gold. We haven't traded it for a while. So if you're trading that on the lower time frames, that's looking quite interesting this morning. Looking at the stock markets, we discussed this last week. I mentioned that despite the bullish move that we'd had over the previous couple of weeks, it was looking overall pretty bearish. Now, if we were looking at this over the weekend, we wouldn't have had the start of this bearish move over here, but we did have a bearish inverted hammer. We'd seen the previous support level respected, but as I mentioned a week ago in our previous market review, which you can go and check obviously on the channel, I mentioned that the stock markets are looking, certainly from an Elliott wave point of view, looking very bearish. So that's what it looks like on the weekly time frame. Daily is a bit more interesting. This is not quite as bearish as our other two indices that I like to look at, being the S&P and the NASDAQ. But certainly today, with this bearish candle, if we get a close below that price point there, then we got an aggressive reversal, no question about it. I did mention before that this is looking like a perfect ABC pattern when counting Elliott waves, and that may well be transpiring. So keep an eye on that. It's a little bit more obvious though when we drop down to the S&P 500. So Similar picture with that previous support level being held just on 3 weeks ago, 4 weeks ago. And also with last week's bearish candle after having made a final high there through the course of the week, which was here. So very similar picture on S&P. But it's when we get to our bellwether NASDAQ that things are looking even more interesting. So a week ago, last week, we did actually get that close outside of the channel at long last. This is also a class 1M pattern. So for those folks who were looking to get involved on this, and certainly with a hybrid, you would have noticed a breakdown in that bullish cyclicity with a bearish impulse candle, and you would have already shorted this market at open on Friday. So those of you who are trading our hybrid strategies, this was the only real setup that we had on the daily as an execution time frame, and you should be nicely short on that already. So let's see what happens there. If you are trading this on the lower time frames, you need to wait a little bit longer because we are both inside of the channel and we don't have a class 1M pattern on this selection time frame. So just need to bide your time on that a little bit longer. But nevertheless, from a technical point of view, this is looking very, very interesting, where we've had that ABC pattern, potential class 1, class 2, and now I beg your pardon, wave counting, wave 3, wave 1, wave 2, wave 3 after ABC pattern. For those of you who are Elliott wave counters. Now, remember, the danger with Elliott wave theory is using it as a predictive tool. You shouldn't do that at all. But when it does pan out, those wave 3s can be very powerful indeed. And not only that, this is the first wave in a wave 3 of a wave 3. So that preceding cyclicity over there actually being wave 1 on the higher time frame. Just going back to weekly to illustrate that. Wave 1, wave 2, this is potentially wave 3 here on the weekly. But don't get caught up in Elliott wave theory. It's not necessary at all. And all of our strategies take these things into account anyway. All right, it's not FTSE actually we're going to be looking at. Let's have a quick look at oil. Now, we know and have discussed this previously. This has been really good for us over the last while. And for those of you trading oil, this has been, should have been pretty profitable. I noted this last week as well. We've had multiple candles, impulse candles in a row. So in exactly the opposite way that we were talking about on Aussie Kiwi, here on oil now, 1, 2, 3, 4, 5, 6, 7, 8 impulse candles in a row, a sign of distinct strength. So that's all been pretty great for us. If you're looking at this on the daily time frame, the cyclicity very much intact here in this bullish trend. And for those of you who are trading it, then you may well be long on this again, using this as your execution time frame. And of course, this also is now valid as a selection time frame. Sorry, just having a sip of water, a dry throat. All right, so that should be useful, but obviously if we drop down to H4, you'll notice that, yes, it is coming back, but we do need to have that bullish impulse candle before we can go long on this one. But certainly the strength on oil has been great to trade. One of the instruments that we've taken increasing interest in trading over the last year or two, of course, is Bitcoin. And for those folks who don't mind being inside of the channel, you would have been looking for a hybrid with this weekly time frame showing a potentially valid class 1M pattern if we do get a ring high. So we're looking at the cyclicity within this retracement wave. Of course, that would be visible here on the daily time frame. But it is worth noting that it did pull back inside of the channel on weekly. This is still very much a strong class 4M pattern. So still would be premature. You're waiting for a breakdown in that bullish cyclicity. But what is interesting again here, and this is something that's really important to me, folks, is how these support resistance levels are respected. It's one of our key risk management tools is only trading instruments that are really liquid. And that's one of the reasons why we didn't start trading cryptocurrencies when they in their early days, is really because of lack of liquidity. So here we're seeing how this resistance level has been respected is in fact a sign of increased liquidity. In fact, support and resistance come from excess supply of liquidity in that direction. So in this case, there were not as many buyers executing market buy orders or even having buy stops to soak up the sell limit orders. So there were more sell limit orders than there were people willing to take up those sell limit orders, which means that at the moment there are more sellers and have been more sellers in the market, and in order to respect that as a resistance level, which bodes quite well for a breakdown in this bullish cyclicity. Now, I'm not trying to predict that at all. You guys know my feelings around prediction, that it's an absolute waste of time. Despite the fact that the human brain is a prediction engine, that's really what you've got to overcome. But it is still quite intriguing to see that. And it's also a sign that this is an instrument that is worth trading, thanks to the fact that there's clearly enough liquidity in the market. All right, so let's keep an eye on Bitcoin through the course of this week. Let's see what happens on that time frame. Right, so here we go. Let me just go to the weekly time frame first. Actually, this is, yeah, there we are, weekly. On US 5-year treasuries, this is something that I've recommended that people trade over many, many years, but unfortunately, a lot of the brokers that have been available to retail traders don't include these. Now, of course, with our move to our new broker, we are able to trade 5 and 10-year treasuries. I prefer the 5-year treasuries, always have done. And here's an example of how easy, in a way, it is to trade some of these instruments. What's also very advantageous about these is their lack of correlation to the other instruments we trade in many cases. So here on the weekly time frame, you can see this very strong bearish trend. We did have a brief breakdown in cyclicity, but we had a resumption of it. And last week, certainly another bearish impulse candle, even though it was a bit of a load test, coming into the territory of being a hammer candle. Looking at that on daily, let me just get onto the right time frame here. You will notice that really that retracement was all Friday. Cyclicity is still, in fact, very much intact on this time frame. So still very, very bearish. And for anyone who's been trading this since the beginning of the year, you would potentially still be short on this instrument. So certainly something that's allowed people to rake in some profits to counter the difficult trading conditions that we've had in the currency markets. Also, just having a quick look at the 4-hour time frame, you see this retracement is busy taking place at the moment. Another potential setup for hybrid traders as well, of course, if we get a breakdown in this bullish cyclicity. Strong resistance coming up ahead, so that's going to be very interesting as well. So do keep an eye open for that. For those folks who were trading this last week, you would have found a couple of areas to short the market. I think we had a loser in this territory, stopped out with an immediate re-entry, which ultimately worked out very nicely if you were using the 3-6 trailing stop rule. So remember, a winner and a loser, you end up making really good money when you use an asymmetric or convex strategy. All right, so folks, that's pretty much it from me. I hope that you got value out of today's session. Remember that if you have and you want to be updated when we bring out new training material, please make sure you subscribe to the channel, hit that notifications bell. And if you've enjoyed today, I'd really appreciate it if you hit that like button as well. If you've got any questions, drop them into the comments below. I answer each and every one of them personally. So please make sure that you do that. And that's pretty much it. All right, so folks, maybe we'll be chatting to you again later in the week. Have a safe trading week. There's lots of potential showing itself in the market, but if there is nothing to trade, then sit on your hands. All right, folks, have a great week. I'll chat to you all soon. Bye for now.